Are you ready for part 2 of how to build your real estate power team? It's coming your way right now. Okay, we are back. We're teaching you how to build your very own personal power team. And in our last video, we talked about how important it is to be rooted to freedom for money, time, peace of mind that can all come by doing real estate successfully. And so the 5 additional F's that you're going to need to build your power team, we talked in the last video about finding the right kind of realtors that can find these good deals. And today we're talking about the second and third F, which is fix and fund. We need someone to fix these homes, and we need to make sure we're funding them the right way.
Okay, now again, we're talking about building a power team. So this is you getting outside of putting on the tool belt yourself and swinging the hammer. You want to find individuals who are competent and know what they're doing in an investor's world. Now this is different. We oftentimes talk about putting on the investor goggles, and especially when it comes to fixing up the property, you want to make sure that you're not wearing your consumer goggles. This isn't a home that you're going to move into. This isn't your dream home. You're not fixing it up and making it to the nines and putting it in the granite and the gold fixtures and the golden porcelain tub or whatever. Right? You're not putting all the fancy things in. You're just putting in and fixing it up to a certain level so that it is appropriate to go ahead and rent out.
This is the opposite of the approach of hiring an interior decorator that is going to look at the house and say, oh my gosh, there's so much potential. I don't want that person setting foot in my property, because this is all about getting functional and tactical. And so we're looking, like Steven said, for a competent repair person, but does competent repair person actually go so far even as a licensed contractor that's bonded? Friends, that stuff already gets really pricey, and the reality is you can either pay $60 an hour for someone to swing a hammer at a nail, or you can pay someone $15 an hour. And so in the game, understand that your margin for winning and success in real estate comes down to getting good work done at a really good, fair price, not at that really high level $100 a foot mentality.
Yeah, and I will say, this is a place where you really want to get real. Don't go to Google and just do a search. I'm sorry, but Google does not tell you who the very best, highest rated, most honest handymen are. But that is what you're looking for. That's what you want to find. And so the question here, I think that probably is on everyone's mind when it comes to fixing a home is, Kris, how do you identify those type of people? How do you find them? And then how do you kind of get them in your employ?
So this is really good. There's a couple important things that I look for when I do this. And the first one that I look for is competence, and then I look for price. Let's talk about competence. Competence is getting the work done in a proper time frame, meaning quality over time. That is what competency means. And then the number 2 is price. So you could literally hit social media or the classifieds and just go out and get a minimum of 3 bids. So when you go in and you assess and you know what work needs to be done, get 3 different eyeballs on it. Yes, it does take extra time to get them and to meet with each one of them individually or as a group and to spend time. But what you're really doing is building a team. So as you find the person that you're going to work with long term, that means way less time, but still getting the job done. In the beginning, we've got to build the team, and that takes a little bit. So what I want you to do is I want you to look for people that probably broadcast themselves as handymen, that have the ability to do everything from roofing and flooring and cosmetic and things like that, some plumbing and some electrical. That's generally what you're going to look for in a home. And there's someone that usually possesses all of those abilities, and have them come out and get 3 different bids. The purpose of the 3 bids is to give them all the same projects, and you just have a chance to actually have them compete in price against each other. And what's going to happen is you're probably going to have a front runner that's going to do it for less than the other 2. When you find that person, or you may need to get more bids until you find that person, then you got to test their competency, which is, can you do the work at the quality I'm looking for in the time frame? Both of those are really, really, really important. And I just want to throw out a little bonus here. When you pay these people, pay them half up front and do not pay the other half until the job is completed. And I'll sometimes go one step further, because handymen are notorious for mismanaging their time. 1 week turns into 4 weeks, astonishingly fast. So what I'll generally do is, if I agree that the project is $4,000, and I pay them $2,000 up front to cover their materials, then they're very motivated to make the other half of the money. But what I let them know is I'll actually have them tell me how long it'll take. And if they say 2 weeks, and if that fits my budget is reasonable, I'll say, great. What'll happen is 2 weeks from now on this day, I'll write you a $2,000 check. If you'll get 3 days of leniency, but 3 days after that, I will be giving you an $1,800 check or a $1,500 check, which means that you actually get penalized for time, because guess who else is being penalized for time? You. And I like to pass that right on to them to actually create. Now, this is a little bit of an aggressive stance, but it works for me.
I want to take that a little bit of a different angle because I think the concept is amazing what you're talking about here and giving people some opportunities in learning how to really build that power team appropriately. Most of this, when we're talking about handyman and building the fix-it side of this equation, you want to properly incentivize them, right? This is what we're talking about, giving them a proper incentive to fix the home in a timely manner and to do it in a certain way. Communication here is key.
Yes.
If you're not appropriately communicating with them everything that you do want and everything that you don't want within the time frames that you want it, then you're doing them a disservice and yourself a disservice. One other thing that I was gonna mention here that you can do and add in is you can give them a bonus. Now you can work this into your budget, so this doesn't have to be negotiated after the fact or doesn't have to eke into your profits necessarily. But you can say, look, I'm looking to get this job done, for example, for $3,500. But if you get it done in the 2-week time frame, I'll give you an additional $500. So that just takes a little bit of a different angle. It's kind of the same process, same concept. But if you will do that, they're going to be way more likely to go to work for you, to work harder, faster, to make it better, and give you their best. And so this is what you're really looking for.
And you're going to really find out a lot about you, and you're going to find out a lot about them. When it comes to finding a handyman and really doing the whole fix-it part of the fix-it F in the whole system, is it starts with assessing, then it goes to interviewing the right person, and then it goes to management. Now, the management means they're the ones doing the work, but you've got to look over their shoulder and make sure that you're checking up on the progress, make sure they know that you care about the project and that it's going accordingly. Down the road, when you have a trusted handyman, I call up people today, and there's one conversation, or even my manager has it, and right now everything's being done, no questions asked, and they know exactly what to do. So really, this is a rapport building period of time, and to let them know, I'm going to be doing a lot more projects. There's future projects on the line. This is really important for these people. So I'm really looking for a good trusted relationship, and trust for me comes down to honesty, it comes down to quality, and it comes down to time frame. So Steven's absolutely right. You can incentivize them with the carrot at the end, but I also like to let them know what might happen if we go over that time frame. And if you're ever going to enforce a deadline, make sure they help create the deadline. That's another one of the big secrets when it comes to fixing.
All right, the second part of this video today is about funding. And funding obviously is one of those really important parts of the process. If you want to do real estate, you need the appropriate funding. If you want to even fix the home in the right way, you need the appropriate funding. So this is a great segue.
And I just want to pause for a second because there's 3 ways you could have funded this deal. You could have taken Steven and my lease option course where we were training you, or we have trained you, and you're now part of our community. And we're teaching you how to find deals with no money and no credit, and it's already funded. You might have taken our Partner Profits course, and in that one, we showed you how to line up a partner who put their money up, and now that's how you funded the deal. Let's assume for this video that we're using traditional funding, which means we need to work with a loan officer, whether it's for a partner's sake or for your own. Generally with investment real estate, somebody needs to put down a 20% down payment. That can be funded from a 401k, an IRA, from equity in another property, which on an average size deal, you might be needing $30,000 or $40,000 or $50,000 to do a real estate transaction, and you need to have the proper funding team, which in the world of real estate means you got to have a really gifted loan officer.
Now let's talk about loan officers, because again, loan officers, quite a lot like realtors, are a dime a dozen. They're all over the place, and there are so many different mortgage lenders and mortgage brokerages and banks that are vying for your business. One of the biggest things, I think, that this is the biggest takeaway that you can have here in the world of funding, is make sure that you find a lender or you find a mortgage or loan officer who does the majority of their work with investors. Now, if you're going around and you're trying to get a loan, most places do primary residence financing, right? They're loaning on people's first home or their primary residence. That loan world is a lot different than investment financing. It really just is.
And for those of you that don't actually even know what we mean when we say loan officer, right now, if you bank at Chase or wherever you go to bank, or if it's a local credit union, that's you interfacing directly with the bank. Yeah. A loan officer is an individual who interfaces with many banks. And what they do is they understand that all banks have different lending programs. They're all a little bit different. They're all a little unique. They all offer slightly different rates. And not all loan officers are created equal. Some have done so much investment portfolio lending, they've worked with so many banks, and they do so many deals that they get these incredible volume rates. What that means is they do every month, they're known for pushing so many new loans through successfully, and that they're successfully marketing and finding investors and people that need loans, and they actually get them all done, that they start getting preferential treatment with the bank, which means that those loan officers will have their banks give you, the investor, even better rates and even better deals. So really the question is, how do you find a good loan officer? And part of it is knowing what you want. You're going to want to pull out your pen and paper, and you're going to want to take some notes on what you need when finding the right loan officer for your power team.
Awesome. So most people, when they get in started in real estate, they're super rate conscious.
Rate is everything.
And most loan officers are super rate conscious,
Stephen,
right?
but let me ask you,
sure,
how much do you care about the rate?
I don't care. Well, that's not true. We care a little bit, but I only care in terms of, is it going to help me to get my next deal? This is the difference between finding a loan officer who's rate conscious as opposed to one that is more portfolio minded. And I want to talk about what that means here for just a second, right? The rate on the home, what we're talking about is the percentage rate, right? How much you're actually paying to borrow that money. And that percentage rate is what we pay out in interest in the home, right? And so in any mortgage payment, you're paying a portion of it to the principal, or actually paying down the loan on the home, and the other portion is being paid towards the interest, or that's what the bank or the lender is making. Now, so many people are rate conscious because that rate consciousness is what's going to allow you to either pay more or pay less out over the life of that loan. The problem with being so rate conscious is sometimes it gets you into this rut of you might bypass your next deal in order to get a lower rate now, but that might stop your investment possibilities, right? If I'm going to get home number 3 or 4 or 5 or whatever, and I did home number 1 or 2 a certain way, that may completely close the doors for more opportunity. And so I'm looking for a loan officer that's going to open those doors for me.
So when Stephen talks about a loan officer, instead of being rate conscious, that's portfolio minded, what that means is, imagine that a loan officer is working with 10 banks, and it's like one big jigsaw puzzle. And we've got to figure out which banks to use in which order for which properties that are being bought. And you're looking for an experienced loan officer that can help you maximize your credit. Because once you've used it all up, then we need to go maximize somebody else's credit. And we're always looking for maximizing credit and doing it the most intelligent way. So here are the 3 things that you're looking for when it comes to finding a loan officer. Number 1, they need to specialize in investment lending instead of primary residence lending. Write that down. Investment lending expertise. Number 2, portfolio minded means that they work with probably at least 5 to 10 banks on a regular basis. And you'll find that most loan officers do not work for a number of different banks because they're not doing enough volume, which leads us to number 3. We're looking for a loan officer that pushes lots of volume. They should be able to brag and say things like, oh yeah, last year I lended and helped put together tens of millions or hundreds of millions of dollars worth of mortgages together on properties that we've done. Okay, that kind of volume, working with that many different banks, specialized in investment, is a winner for you. That's who you're looking for on your team to be your loan officer, to help you figure out how to secure the long-term money with banks as you're going from deal to deal to deal. So let's summarize real quick. In our first video, we talked about the power of freedom, and we talked about how you find the realtor that's going to help you find the deals. Now we're talking about fixing and funding, and today we've talked about what you need to do as far as vetting and finding the right kind of handyman to help do the work on the business. And we also talked about what you need to look for when finding the right loan officer that's going to help you fund the deal. And that takes us through finding, fixing, and funding. In our next video, we're going to hit 2 very key elements. We're going to talk about how you fill the home with the right property manager, and then how you follow up on the home so that you get it to continue building and maximizing your portfolio with time. And again, friends, this whole series is all about how you build a portfolio and how you build a power team. And I want to just say something. Stephen was the first person that I brought on to my personal power team when I got started. Stephen has served in a variety of capacities, and now he helps me run our entire massive real estate empire. We've got you, our Limitless Wealth YouTube Nation, on the line watching our videos and reaching out to us. And now what we're doing is we're building your real estate power portfolios. And if you want to know how to tap into more than just watching these videos videos, if you want to know how to tap into our power team, then go ahead and click the link up here and click the option where you get a chance to talk with Steven, myself, or a member of our team who can lay out all the details, show you our deals, where we're investing, how. We'll introduce you to our power team, and we'll show you how you can leverage our entire power team to build your portfolio. This is exactly how I built my original real estate power team that has now led to a system of nearly $1 billion worth of real estate. So excited tomorrow to bring you the next and final concluding segment on how you build your very own real estate power team.